Dad, who actually decides what interest rates are? They're on the news every single day.
A group called the Federal Reserve. They set the price of borrowing money for the entire country, and they answer to basically nobody.
Wait, nobody votes for them? That seems kind of wild.
The president appoints the chair, Congress confirms them, and then they're supposed to act independently. Think of it like a referee. You don't want the home team picking the ref.
Okay, but what even is the Fed? Like, is it one bank?
It's 12 regional banks plus a board in Washington. The Federal Open Market Committee, the FOMC, is the group that actually votes on rates. 12 people changing the economy for $330 million.
12 people? No pressure.
Right? The Fed has two jobs, they call it the dual mandate. Keep prices stable, and keep as many people employed as possible. Those two goals actually fight each other sometimes.
How do they fight? Isn't more jobs always good?
When everyone has a job, people spend more, prices rise, and you get inflation. The Fed's main tool to cool that down is raising interest rates, making borrowing more expensive.
So they raise rates and suddenly everything costs more to borrow?
Exactly. The Fed funds rate is the overnight rate banks charge each other. It's like a master dial, turn it up, and every other rate in the country follows. Mortgages, car loans, credit cards.
Wait, savers win when rates go up? That's backwards from everything.
Borrowers lose, savers win. That's the beautiful tension. The Fed uses that as a steering wheel, slow down spending, cool off inflation, then lower rates to restart growth.
Okay, what about quantitative easing? I hear that term and I feel nothing.
Imagine the economy is a campfire going out. QE is the Fed throwing giant logs on it. They buy bonds from banks, which pumps cash into the financial system when just lowering rates isn't enough.
So they're just printing money? Like, literally?
Not literally printing, they create digital dollars electronically. It's real money, but it comes with risks. Too much and you get inflation. The art is knowing when to stop.
Did they do the QE thing in 2008? I know something blew up then.
Massively. The financial system nearly collapsed. The Fed cut rates to basically zero and started QE, buying trillions in bonds. It was the most aggressive Fed action in history up to that point.
4 trillion in 2020? That number doesn't even feel real.
COVID shut down the entire economy in weeks. The Fed went enormous fast. Then when inflation spiked in 2022, they raised rates at the fastest pace in 40 years to unwind all of that.
Why does it even matter that they're independent? Why not just let the president control it?
Because every politician wants low rates forever, cheap money, happy voters, good economy right now. But cheap money forever causes catastrophic inflation. Independence lets them make unpopular decisions that are right long-term.
Like a doctor who tells you to eat vegetables even though you don't want to.
Exactly that. Countries that lose central bank independence often spiral into hyperinflation. Look at what happened in Venezuela, Zimbabwe, Turkey. It's not theoretical, it's happened dozens of times.
So the Fed is basically the most important thing most people know nothing about.
That's actually a perfect summary. Their decisions touch every mortgage, every car payment, every savings account, every job. And most people couldn't tell you who chairs it.
I'm going to feel very smart at dinner now. Thanks, Dad.
Just don't bring up the Fed at Thanksgiving. Trust me on that one.